You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, CEO of the MacBeth Group in Edmonton and author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. Welcome to the show, Hilliard.
Nice to be on your show again.
The Canadian government just a few weeks ago sold off the last of its gold reserves. Should Canadians be concerned that while other countries like China and Russia are stocking up on as much gold as they can lay their hands on, Canada has sold off the last of its bullion?
Well, the nice thing about Canada is that we've got a lot of commodities, some of which have collapsed in price, as we know, like natural gas and oil. But we do produce a lot of gold in Canada, and so the government at any time could always slap a little extra tax and say, oh, you know what, we're going to claim 10% of all your gold production. There isn't a whole lot the owner of the gold mine could do. They can't move it to Venezuela or something like that. And in the past, they've done that. I think in the 1920s, 1930s, there was a special tax on gold. So if the gold price goes up substantially, which the government of Canada does not expect, but if it could possibly happen, then there's lots of room to have like an excess profits tax on there or something. And the Liberal government probably wouldn't be afraid to do that. And we could build our gold reserves back up again. So, I mean, you can make the argument both ways, but countries like France, Germany, and the United States have a huge holdings of gold, and it goes back to the 1920s as far as Germany and France are concerned, and they wouldn't dare sell off their gold because everybody would lose confidence in their I guess the euro now if they said that they would sell off their gold. But in Canada, we don't seem to be that concerned about it. It's and you know, it's an interesting commodity too, because it's one of the commodities where the price has been rising, even though the U.S. dollar has been rising. And in Canada, for the Canadian producers, the costs are declining dramatically because our Canadian dollar's gone down. So the profit margins for the Canadian, the miners that have Canadian production, are going to be quite a bit better in the next year or two than they've been in the past.
Yes, and I've been told that buying junior mining stock versus bullion is perhaps one of your best bets. But of course, be very careful which company you buy into. Check into it to make sure they're healthy enough to survive the last downturn.
Well, exactly, and I'm sure you have other guests on your show that are expert on mining, but I have owned some shares in gold mining companies for myself and my clients, and still continue to. And the ratio between the price of the gold mining shares, not necessarily junior mining, but the ones that have lots of production, the shares of gold mining companies have just plummeted in relation to the price of gold. The gold mining shares are the cheapest they've been in probably 30, 40 years in comparison to the gold price. And I think it's because people decided they wanted to own the gold directly, and it became more feasible to do that with all the ETFs that are out there now.
Well, on a show we did with Martin Element, he pointed out the certificate that you receive for the gold that you bought and actually owning the bullion, there's something like a 500 to 1 ratio. That's called paper gold compared to real gold.
Yeah, you know, the whole thing about people that want to own gold is that they don't, for one thing, they really don't trust paper currencies, which is a valid concern because, as people will point out, practically every single paper currency in the history of the world, going back thousands of years, sooner or later becomes worthless. So gold is the only currency, if you could call it a currency, that has never become worthless. But the gold bugs are paranoid that, for instance, in Fort Knox, the U.S. government's supposed to have a tremendous holding of gold, but nobody's verified it for a long, long time. There's been no audit. So the idea that you could own an ETF and then the gold actually wouldn't be there is a terrifying thought. So, but you know, as Mark Twain said, I don't know if you've ever heard this, but Mark Twain was a big speculator. He had really high income from his books, and he was a big speculator in the stock market. He got burned many times, and he had gotten burned in gold mining shares at one point. He said, a gold mine is a hole in the ground with a liar standing beside it. So there's no guarantee that the gold mine that you're talking about and the shares in the gold mine, there's no, I guess there's hard to verify for sure that they have those reserves in the ground. But that's if as long as they're telling the truth, as long as they're not another Bre-X. The good news about gold mining companies is you actually get a multiple because there's gold, almost invariably, there's gold in the ground that they haven't added to their reserves yet. But they own the rights to, but they haven't actually delineated yet. And so if the price of gold goes up, you actually get the increase in value of the extra gold reserves that they have. Because the way it works is they raise a certain amount of money, they do a certain amount of drilling, they do enough drilling to justify getting approval to go ahead with the mine and to raise the money to build the mine, but they don't keep drilling further and further out until the gold mining process is going on for a few years, and then they start looking for more reserves. And sometimes they don't find any additional reserves, and the gold mine peters out. But quite often they will find additional reserves, and that's an extra bonus, like a call option, if you like, that you don't get if you just buy a certificate in gold, an ETF, because there's no leverage on that.
And is it true some of the major producing gold companies have been hoarding the gold, waiting for a higher price?
Well, for sure. They do all kinds of gimmicks. So there's a thing called high grading that they do, and and it's not just a gimmick. When the gold price is low, the auditors tell them that they can't include some of their reserves in their reserve estimates. So they have proven and probable reserves, but it depends on the price of gold. So a whole bunch of gold becomes worthless if the price of gold goes down, and then when the price of gold goes back up again, a whole bunch of gold becomes genuine reserves again, and they get to add that to their reserves. So all of a sudden these reserves, which were always there, but all of a sudden they reappear out of nowhere as if they didn't exist. Because the price gets above a certain level. It's being the economic value against the cost of production. But the reverse is going to happen with a bunch of oil and gas mining companies here in the next 3 or 4 months. It's going to be brutal, because if the price of oil drops below a certain level, then they have to eliminate a bunch of reserves that are unrecoverable, given current technology and current economics. And then when they go to their lenders, the lenders are going to say, well, we can't lend you as much money because you don't have the reserves anymore.
Catch-22.
It's going to be terrible. And that process, by the way, is just happening, I understand, and not an insider, but I understand from talking to people in Calgary that process is just underway right now. The banks, it's very interesting to listen to the bank conference calls when they have their annual, which has just been completed in the last 2 weeks, because they got a lot of questions about oil and gas loans to Alberta, loans to oil and gas, that sort of thing. And the bank CEOs, all of them said they weren't concerned about it. They have very small exposure and all that kind of stuff. But the American analysts that were phoning in the conference calls were really pushing, because in the U.S., there's been some major problems with some of these oil and gas companies. So it remains to be seen whether Alberta companies are in better shape or whether Canadians are just being too polite to point out the realities of the situation. It's hard to know which way it's going to go, but there certainly are some companies that will be unable to pay back their loans, and so there's been quite a rally last week in shares in the junior, especially the junior, but all of the oil and gas companies, and based on the rally in crude from $25 to $37. But it'll be interesting to see, because those companies need a pretty high price for oil to pay back their loans, and I don't know exactly how it's all going to shake out.
How did the NDP government's throne speech work out?
Well, I haven't seen the results yet today. I think it's just happening just as we maybe just about to start. But one of the things that talking to people here in Alberta is a disappointment. I think generally everybody's been puzzled why the NDP, who got a tremendous mandate, people really wanted change, and they rejected the old and they brought in the new. And so far on several of the files that they've acted on, they've been very timid and very so today they had a floor speech in last spring. They had just been elected, and I think the election was in May. Throne speech was in June. So now, really, 10 months later, this is really their first chance to lay out their plan. They haven't done a budget yet, which is extremely unusual. It's well into March. Usually the budget would have been done by now, but they're delaying it till April, apparently. So there's a lot of things up in the air, and people are watching very closely because so far the new government, the NDP government, which can't really be called new anymore, hasn't really stepped out and made any bold moves. They did have a climate change review, and they did talk about a carbon tax, but they did. Unfortunately, for people that are in favor of a carbon tax, unfortunately they didn't copy BC's carbon tax because it's really the best model. They kind of did a little bit of this and a little bit of that, and the people I've talked to in that industry say unfortunately they missed an opportunity. But they're very worried because the revenues for the government, which are very dependent on oil and gas, we haven't seen the budget, so we don't know, but I'm sure that they're way down.
Well, I'm just taking a look at Google about the Alberta throne speech. Yes, they'll bring in some kind of a carbon tax that'll bring in $3 billion a year. Now, how they plan to do that, they haven't said.
That is interesting because the issue between BC and Alberta was BC's carbon tax is supposed to be revenue neutral, as you know. And so the idea there is they cut income taxes and sales taxes or some other kind of tax, and they bring in a carbon tax. So $3 billion is pretty hefty. And the difference with Alberta is they said they were going to raise the money on the carbon tax, but they were going to use that money to try and provide investments and incentives to different industries to try and diversify the economy.
Well, further detail here on the Alberta throne speech. This carbon tax Albertans will pay will cost the average family $470 a year by 2018.
Wow, that's a big number. That sounds like I was thinking, I was remembering Ralph Bucks. Do you remember Ralph Bucks? Ralph Klein's mailed out those checks for $100 and $200, and of course they got spent right away. But
oh yeah, the energy rebate for higher electricity prices. I remember those.
Yeah, and anyway.
But usually those go out just before an election for some reason.
Yeah, it's more of an election buying thing than an actual real policy. But $400 a year, especially given how difficult things are right now in Alberta, there's every oil company has asked, as everybody knows, I'm sure, every oil company has asked all of their suppliers to take a 15-20% cut, and they're basically, I think they're getting 100% compliance. They're not, nobody's going to say no, Mr. Suncor, no, Mr. Syncrude, no, Mr. Imperial Oil. I'm not going to accept your terms because in a lot of cases they're really dependent on these big companies as their main customers. So there's been a lot of so on top of that, $400 a year is actually a pretty large number.
And if people are upset about government policies, well, Alberta says it's going to overhaul labor rules in compliance with a Supreme Court of Canada ruling to keep key services intact while allowing public sector workers the right to strike. So you might see a lot more labor unrest in Alberta.
Well, I mean, there's going to be some real disagreements between the public sector and the private sector because the private sector has been asked to take these huge cuts, as I mentioned, and if the public sector tries to get an increase at this point, there's going to be some major resistance coming out. I think, and so but the problem is the base, the core support for the NDP in the past has been public sector unions. That's one of their core groups, and they obviously got much wider support beyond that because their win in the election was so big, but their core support is still with the unions, and most of the union workers in Alberta are with the public sector. There's very few private sector unions in Alberta. So,
well, I see public opinion polls in Alberta are really slamming the NDP government, but they've only been in power for less than a year. And what's more, they weren't in charge for the last 40 plus years before that as the economy turned down. I mean, they've picked up the baby after it's been thrown out of the car.
I think that's right, and I think that they made, in my opinion anyway, they made a big mistake, because they should have done was to outline how different they're going to be from the predecessors, and some of that, unfortunately, it's like there was one of the gold companies, going back to the gold companies, Gold Corp, which I think its headquarters might be in Vancouver. They took what they call a kitchen sink quarter recently, where they just took everything and wrote down everything they possibly could. And at the same time, there was a new CEO had come in. And so basically they said, that was the past, we're not going to do that anymore. And now we're into a new era, and that's what most people do, and that's probably the right thing to do. Then you start with a clean slate and go forward. But for some reason, the new government in Alberta, the NDP government, didn't do that. And I think they're gonna find that they end up owning. I mean, it's ridiculous, but Mr. O'Leary, Kevin O'Leary, wrote a letter saying that it's Rachel Notley's fault that all these things happen. And how could it be her fault? She hasn't been there long enough. But at some point they're going to start owning some of this stuff, and I don't know if it would have made a huge difference, but they should have at least tried to sort of have a break with the past and have a delineation. Say, okay, all that belongs to the past. That's not our fault. Now we're going to do something. And one of the ways to do that is to make some bold moves, and that sort of sets a mark and draws a line in the sand.
What do you think of talk of Kevin O'Leary, formerly on Dragon's Den, running for the Conservative leadership of Canada?
Well, he is in the investment business. I don't know if people are aware of that, but he has had a mutual fund company, and now he's trying to launch a new set of mutual funds. And but he seems to be, I don't know him personally, but he seems to have come out of that popularity thing from the Dragon's Den and now the Shark Tank in the U.S., where he becomes a household name, and very similar to Donald Trump in the U.S., who, I mean, people knew who he was, but it was really The Apprentice, that show. I'm sure
yes,
everybody
of course
remembers that. That's where he really got in. That was a reality show similar to Dragon's Den. So I blame the reality shows for the emergence of these people, because we wouldn't have them otherwise, right? In the past, people would, maybe do other things and prove themselves in other ways. But now all you have to do is get on a reality show, prove yourself, and then run for the highest office in the land. I don't think it's enough of a background to justify. Now, he might be a valid person, but not just based on what he did in the Dragon's Den. Because of my understanding of the Dragon's Den, I try to watch it, but a lot of those companies that come up there, nobody should ever invest in those companies. But it's an entertainment show. It's not really an investment show. Well,
The Apprentice wasn't really an investment show either.
No, it was totally entertainment. And then remember the thing about You're Fired, and it was, like those things are all staged, and people, but they're very popular. So,
well, the whole thing about getting fired, Donald says, unlike Mitt Romney, who made his billions by closing factories and laying off people, he says, I actually hire people. But on The Apprentice, you fired everyone except one person.
His accountant. I remember his accountant there. The only guy that never got fired was the accountant.
That's exactly right. And if there's layoffs in any company, take a look who's left.
The accountant is the last guy to lay himself off.
Every time.
Yeah.
We'll have more with Hilliard MacBeth right after the break.
Bird Dog, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. Coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
Welcome back. We're speaking with Hilliard MacBeth. What are people in Alberta making of this insane real estate market in Vancouver?
It's just hard to imagine. We are living in, as you and I have talked about several times over the past few months, we are living in a really bad real estate market in Edmonton and Calgary, and the numbers that show a decline of 4 or 5% don't begin to tell the story. It's much, much worse than that. And but the reason that they don't show up yet is because people are not able to sell their homes. There are a few homes that are selling, obviously, but most of the homes are just sitting on the market because people have priced them too high, thinking that maybe the prices have only come down 5 or 10%. and until they get more aggressive and drop the prices by 20 or 30%, they're going to have a really tough time finding buyers. So basically, it's just kind of everybody that's trying to sell a house knows how bad it is, and everybody else is sort of unaware. The Vancouver situation is completely different because there's bidding wars and the prices are going up 21% a year. Now, the one thing that I've looked into the index, and it is misleading because only 7% of the houses in BC are above $1 or $2 million. So how the average could be over $1 million is the only way that's possible is because you get a number of really high-profile sales for $7 or $8 million, and that skews the average up to a much higher number. But really, it's just impossible to imagine. And then to think that these houses actually sit empty because nobody bothers to move into them, even after paying $7 million for them, is just mind-boggling. So I think everybody in Alberta is thinking that the Vancouver housing bubble will burst at some point. But I know that I've got a lot of contacts in Vancouver now, and people are they wouldn't believe that in Vancouver. They feel as long as the foreign money keeps pouring in that prices will stay strong. But as I've said before, every bubble bursts eventually, and every bubble corrects back to the price line that was in place before the bubble formed, which in the case of Vancouver is a very big correction, unfortunately.
And again, it's the high-end homes that you hear about, and also only in the toniest parts of town where all the millionaires lived anyway. But in the regular suburbs, house prices have gone up, but not a bid $1 million over asking.
No, and it's funny because I did StatScan. So unfortunately, because we can't get the proper numbers, the actual main index that everybody quotes for real estate prices is the one that's produced by the Real Estate Association, the Canadian Real Estate Association, and the Vancouver Real Estate Board. And obviously, it's in their best interest to put the best possible face on things. So they and of course, when prices are rising and there's big high profile sales at very large numbers, it gets other people excited, and it's good for the market. But there is another survey, and it's done by Statistics Canada, and they only look at new home prices for new houses. And the way they do it is they have their staff phone a bunch of builders and ask them, how much are you selling the price for? What's the square foot? How big is the house? And they try and have a similar house. And there's been almost no increase in prices in the new home pricing market. So it's a real puzzle. Now, obviously, probably what's happened in Vancouver, and I don't know, but I suspect the new homes have been pushed out in further and further out, away from the center, where the land is cheaper. And the cost of construction doesn't go up much over the years. It goes up a little bit, but it doesn't really change that much. So it's really how much does the builder pay for that lot when he buys the lot to build the new home. And if you go far enough out, it doesn't change it. But the survey includes all of the districts of Vancouver, including downtown. But obviously, there aren't a lot of new homes built in downtown Vancouver.
Well, only when you talk about condo high-rises.
Yeah, and condos, if they get smaller and smaller, then the prices don't rise, right? So, I know there's a Trump building going up, and there's a Shangri-La that went up a couple of years ago, but it's a lot, and there's a couple of hotel/condo kind of combinations that are going up, but it's really hard to adjust for the change. If you go back to a house, like some of these houses that people are buying in Point Grey and that sort of thing, the house itself is worth nothing, right? It's just a teardown, and you can see it. Everybody looks, and look at that house, $2 million, and it looks like a garage. They're
tearing down 15-year-old mansions.
Exactly. So, it's all about the land, is what it is. Well, you think about these hotel condo things. If it's a fairly tall building, the amount of land that's attached to each unit is pretty tiny, right? So if they build it high enough, they can keep the cost per unit down to a reasonable level. So that would be a new house price. But one of the things that came out this morning that we should talk about is the numbers for new home construction in Canada, and they're at record high levels, including Vancouver and Toronto. So don't let anybody tell you there's no land left in Vancouver, because obviously you couldn't have a record number of new housing starts. But most of it is in the multi-unit buildings, not in the single-family homes.
Well, in Vancouver, we see entire blocks snapped up and turned into high-rise.
Yeah, exactly. And so it's over 200,000 per year. The record, I think, goes 210,000, something like that, right at the record level. And then people say, well, yes, even in areas where there's a correction already underway, like some of the prairies and some parts of Ontario and Quebec, they're still hitting record high levels. And the reason is, and this is something that's not known very widely, is that they don't actually count a housing start on a tall building until the building actually comes out of the ground. So, as you know, sometimes it can be a year where they're digging out the hole and then they're building the parkade and all the different stuff. And it's only when they get above ground that the government statistics count it as housing starts. So some of the stuff that's being counted in the latest numbers, which was for February, was actually started. The construction actually started with the digging in the ground 2 years ago, and now it's just finally getting to the point where it's coming up through the ground. So, yeah, you imagine the developer trying to guess, what the market's going to be like, and so then it's probably still another year till he actually has people move in. So, at least a year. So, that developer has to guess 3 or 4 years in advance what the market's going to be like. There's no way that they can do that. So, as somebody explained to me, developers develop and builders build, and they keep doing it as long as they can get the financing, and inevitably they overdo it. There's no mechanism, there's no brake pedal, there's no way that they're going to be able to put the brakes on before they build too many units. It just, especially when prices are as high as they are. Can you imagine if you had a piece of land that you could build something on, prices had gone up as much as they have in Vancouver or Toronto? You couldn't hold yourself back from building something. You'd be desperate to get something out there, because now's your chance to cash in. Maybe even sitting on that land for 10 years, and now finally you get the chance to make a profit by building something. So going back 2 or 3 years is when people actually made the decision to start building. Now it's all hitting the market, and the old demand and supply thing, that could be that we could finally be looking at a surplus of units. Maybe especially in Toronto, but maybe even possibly in Vancouver.
Hilliard, thank you very much for chatting with us.
It's great to talk to you again.
My guest has been Hilliard MacBeth, CEO of the MacBethGroup.com in Edmonton and author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. You can forward comments or questions for the show to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.